This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of March the 7th, 2022. We knew this was going to be a crazy volatile week with all of the sanctions, the war in Ukraine, all sorts of ripple effects going across all the markets. And yes, it was a volatile week. We'll talk about the entire week as we go through this podcast highlight show. But back on Monday, we made sure to note that it wasn't just the war in Ukraine and everything associated with it that was driving the gold price higher. Gold prices are mainly driven by real interest rates. And as real interest rates fall, that's very supportive of gold. And as they rise, it's not so supportive. Well, real interest rates are falling again. In fact, they're as low as they've been since the summer of 2020. You recall back then, gold made its all-time highs up near $2,080, and so it would make sense that the gold price is rising as real interest rates fall. Again, that was a topic of discussion on Monday, March the 7th. Again, showing you current real interest rates. Even just a couple days ago, the 10-year real rates were around 90 basis points, now plunging Friday and again today. Why was gold up $30 each of these 2 days? 10-year real rate versus, the inflation expectation, negative 114. That's the lowest it's been since the summer of 2020. So where you read people that don't know any better on Twitter and elsewhere saying, well, soon as, peace breaks out, gold's going to go straight back down. That would probably go down some. But this is the primary reason why gold is soaring. Because real rates are plunging. And why is that? Because crude's $130 freaking dollars. Wheat has been limit up 5 days in a row. Inflation is going to get worse. We get the next CPI on Thursday, but more importantly, inflation expectations are going to get stickier and stickier and higher. Real rates are going to go lower and lower, more and more negative. So regardless of what happens, as I keep telling you, the economic impact of all this is significant. And of course, that next FOMC meeting is next week. That ought to be a doozy. On Tuesday, March the 8th, worldwide chaos in the commodity markets across the base metals and even into the precious metals, crude oil as well. In fact, the London Metals Exchange actually ceased trading in nickel and will remain closed the rest of the week. Anyway, it was a crazy day on Tuesday. We took a look at the silver chart as part of our discussion, again, on Tuesday, March the 8th. You can see it here in silver as well. As you know, silver is doing a sideways flag, horizontal flag between 22 and 28. I don't know how. Now, I drew this line at 29. I'll tell you why in a second. But how many times did you hear me last fall, again, in the fall of 2020, again earlier this year, about how important it was you stay in until there is a weekly close below 22. We might dabble below 22 intra-week and intraday, but until there's a weekly close below 22, we're fine. Obviously, that's paid off. On the flip side, we still have to get a weekly close above 28. Now, this is a daily chart. Okay, so you can see there are days where we've exceeded 28 and actually found more resistance near 29 and even 30. So we'll watch. We got 3 days to go in this week. It still would not at all surprise me if we don't trade above 28 to 29, even 30. But the key will be the weekly close. And man, we got 72 hours until that happens. Anyway, still seems to be a lot of room. If we hadn't gotten that smash back, algo-driven weirdness midday today, right now we'd probably be talking about pushing toward 28. On Wednesday, March the 9th, the discussion turned to gold after a massive smash from what had been pretty overbought conditions. You're subject to those, just like, how we know bear market rallies in stocks are always very sharp because you get very oversold. Some point, everybody that's going to sell has sold, and you're left with nothing but buyers, and you get these sharp rallies. Well, the same thing holds in the other direction. You get overbought. And for a moment, everybody that's going to buy has bought, and you're vulnerable to smashes. That's exactly what we got On Wednesday, price driven all the way back down to near $2,000 an ounce from the highs that we'd seen closer to $2,070 on Tuesday. It was obviously a big topic of discussion at TF Metals Report. Here's part of that podcast. Okay, and finally to the metals and the GDX. Now, when I printed this, you can see it was $19.91. It's like I said, we'll check prices again here in a second when we wrap up. But as I began recording, we're all the way back up to $19.98 and pressed on $2,000 again. The support obviously came in at $19.80. Well, that had been kind of resistance intra-week, going back to the peak right after the war started back on whatever that was, 23rd, 24th of February. Major engulfing candle, though, today. I mean, duh. Anybody can see that. That is a bearish, engulfing reversal candle. But like we said back there on that Friday, the 25th of February, I wouldn't put too much in just plain technicals at this point because there's too much other stuff going on. And there's too much what is really overt manipulation happening like today. So, yeah, you know, if we had a free and fair market, you'd look at that and go, well, the party's over here for a while. Yeah, okay, we'll watch to see what happens the next time price gets up there. But I would not at all be surprised, like I said, to see us now turn, start moving higher, finish the week north of 2,000, which is what we'll want to do to paint the weekly charts with that level of weekly close. Drift higher again next week, get back up into this 2040 to 2060 range before the banks cap us again and attempt to jam us down into option expiration on the 28th and contract expiration on the 30th. That's how I'd expect it to play out in the next couple weeks. Our Thursday conversation this week was with my old friend Alistair McLeod. I've known Alistair for about a decade. He is, of course, head of research at goldmoney.com and an expert on the European markets, the European banks, the LBMA, and everything else that goes on in London. So it's always good to get his perspective, especially at this time with all the assorted risks going on due to the war in Ukraine. Of course, your Thursday conversation is always a free public podcast. You should always check TF Metals Report on Thursdays so that you can listen for yourself. Here's just a snippet of what Alistair and I discussed this week. And again, more can be found at tfmetalsreport.com.
But if I was advising the Russian central bank, I would say you go into the market through China, through other Asian markets, really doesn't matter. Go and hoover up as much physical gold as you can. Now, the purpose of doing that is not so much to add to your own reserves, but to get the price up to a level at which you can then fix it in order to stabilize the ruble. So, you know, it's not difficult. But the problem is nobody's really got an understanding of what really is money and what is credit and what is currency. And the differences are extremely important. They really are.
And on Friday, March the 11th, we wrapped what was a very volatile week, not just in the precious metals, but in every market. And it was quite the day on Friday. Precious metals were slammed early before the COMEX open and then recovered all day long after some dismal U.S. economic data that showed stagflation worsening. Fed's never going to hike as many times as they claim, and real rates are plunging. So gold, when it wrapped up the week, finally on the Globex session at 5 o'clock Eastern, was all the way back up to $19.92. That puts it up more than 1% on the week. And maybe you didn't notice, but that is the second highest weekly close of all time for COMEX digital gold. So we're making great progress here. Expect another volatile week next week. And be sure to check back next weekend for your next edition of the TF Metals Report podcast highlights.